Would you like to make 20 or 30% of your investment overnight? Well, with SPACs, it could be possible. And today, I will tell you the exact moment when you should realize those gains and sell the SPAC. But first, I want to welcome you all to Stocks, Tech, and Beer, where we grab a cold one and talk about the markets. And got a little intro here. If you don't want to hear about beer or what I'm doing, just skip forward to the next chapter. You're good to go. And disclaimer, not financial advice. Please do your own homework. But, I'm still in Texas right now, in Austin, Texas. And I'm recording down in my dungeon, which is very dimly lit, as you might be able to tell at the background here. But it's actually a really nice house, a 6-bedroom house. A bunch of other digital nomads like myself are staying in here. I'm hoping late at night, it's kind of a quiet time to record. We'll see what happens, but fingers crossed. We got a good recording time because I tried earlier today and there's construction going on outside. It was just brutal. But anyways, onto the beer. I'm drinking a Willow Double IPA Pale Ale, and this is from the Outer Range Brewing Company. I picked this up when I was in Colorado. It's in a brewery in Frisco, Colorado. Amazing brewery, really good stuff. And it's just right outside Breckenridge. Actually, the town, if you come through Breckenridge one way, you go through Frisco, a little bigger town than Breckenridge is. But they have this brewery, Outer Range, and it's one of the top ranked breweries in the area. So I had to go there and check it out. And it was definitely worth it. They'd probably, I couldn't try them all when I was there the one day. I'd say 7, 8 IPAs on tap, different ones. And this is one of the ones I could take with me. So I did that, and I just wanted to give a shout out to Outer Range Brewing Company. They have really good stuff. If you're ever in the Breckenridge, Frisco area, you got to stop there. This is amazing beer. I already know this is going to be good. I've had a few already. Not tonight, but before. Yeah, you get a little juiciness. You can see the haze in here. And finishes with a little hop. I mean, this is exactly what you want in your IPA. This is amazing. I should get it all the time. We'll give this one a 9 out of 10. That's really high up there on our rating scale. It might even be the leader on the board right now. All right, now onto the investing stuff. Today, we're going to talk about taking profits in SPACs. And if you need a refresher on what a SPAC is, I'll put a link up here somewhere, and you can click on that, and you can get a preview of what it is and a full-on view. But at its core, a SPAC is a public company. It's a stock you can buy, and its sole purpose is to use a cash stockpile, which is its only asset, it's cash, and use that cash to buy shares of a private company and bring it public through this vehicle. And the time when you can pounce on these 20-30% overnight deals is when the SPAC announces a merger. But here's the thing, the bounce is really short-lived. So after it goes public, like I said, the algorithms jump in, or traders just buying headlines. But then the real analysts get to work and they start doing some analysis on the company. Like, is the private company a good company? Is it profitable? What's its business model? Is it going to be overvalued when it goes public? What is it worth? And these analysts, they're not buying the stock right then, so the spike goes is short-lived as people try to do the price discovery and figure these things out. So they sell the SPAC, and it goes down to usually around pre-merger levels. And then you can go in and see if it's good, and then maybe it'll take off, maybe it won't. But let me show you a few examples of what I mean first. All right, let's look at IPOB. This is one of Chamath Palihapitiya's SPACs, and it merged with Open Door back in early September. And you can see right here is when they announced the merger. But you can see there's a run up going into it. And it went from 10.55, and in a week and a half, 2 weeks, it popped up to almost $18. We'll say $17.50. But you can also see it pulled back right away, and it went down to about $14. And it didn't pull back quite to pre-merger levels, but it did pull back. And this is when people decided, Open Door Labs, hey, it's a COVID play. This is a real estate company that'll buy your house you're trying to sell. They'll fix it up and they'll put it in the market, and they'll take all the risk of, owning the house and coming up with a good sale, a quick sale. And, it's a big deal. There's other companies doing that as well, like Redfin and Zillow, where they'll just, instantly buy your house for the algorithm. The AI decides what it is and what improvements need to be made, and they kind of figure it out. You can do an instant sale. So when you want to sell your house, it gets rid of all the hassles of doing it, because, any of y'all sold a house, which I'm sure a few of you have, it is a huge pain. It's a stressful process, and this takes the stress out, and it's definitely worth it. So they decided it was COVID play, and it took off. So this was one that was worth it. You know, you go in, you own Chamath Palpatius things, and he's got a few SPACs right now that are out. It's IPOD, IPOE, IPOF. You can still get the units. You get just the units, but that's what you want to do: get the units and then get the warrants with them when they split up. But this was a good one, and you could have sold it right after this bounce. Let's say it's $17.50, reasonable chance, and it goes back down a little bit to 14. That's when you get back in, and then ride it up for almost a double at 27. And this one could go higher. I don't know. We'll kind of have to watch this. I'm interested to see how it does. And Novus Capital. And this is one that I owned. And yeah, we've talked about it before, but it announced a merger with App Harvester. And you can see when it did, I mean, clearly obvious. It went from $10 a share all the way up to a high of $12.99 that day. I mean, you could have easily sold it for $12.50. So that's a nice 25% jump overnight. You sell it, and then you wait for the dust to clear, everything to settle down, and you get back in right around $10.20, which is pretty close to where it was pre-merger, if you like it. And App Harvester is kind of a cool little indoor farming play. Another one I want to bring to your attention is Netfin Acquisition Corp. So you can see this one, it jumped from about $10.30 all the way up to $12.90 on the back of the announcement or before. But I mean, if you're going to buy these, you're going to have this well in advance. And you could have gotten at 10. You could have even got in at $8, under sub 9 during the pullback in March if you were really like quick on it. But anyways, you hold it for a little bit, and all of a sudden it jumps on an announcement with a company called Triteris. And I wanted to bring this to your attention because Triteris is actually an interesting company. And what they do is they use blockchain to help facilitate financing in commodities trades. I mean, it's really cool use of the blockchain. It's what it should be used for, is smart contracts like these digital contracts. And the blockchain and smart contracts are going to be the future. You're going to hear more and more about these coming up. And the commodities markets has been a place that's been a leader in this. Like, I think one of the first transactions ever happened in the blockchain was a big cheese deal that was done. But anyways, the reason why I want to tell you about this is, so this recently changed ticker symbols. Now it's TRIT. Yeah, I mean, it just happened the other day, so these candles look huge because there's only 2 days of trading. But Triteris is what it's called, and it's actually really reasonably valued, and I'm kind of excited about this. I might actually go and buy some of this. I'm going to give it some thought over the next couple of days. But it's trading at 8 times next year's EBITDA, which is kind of like cash profits. So yeah, I mean, the company's already profitable, unlike some of these companies that go public through SPACs, which don't have a product yet that we talked about, like Nikola and Fiskar, and those stocks, those SPACs, X-SPACs, we'll call them, are just getting hammered right now because people realize it's not realistic. But Triteris, I mean, it's not a sexy company, although it's got blockchain in it, which some people like and should like because it's a cool technology. But it's trading at 8 times profits, which is insanely cheap, and this company's growing really fast. So this is one I'm looking at, and I'm super excited about the valuation. The more I think about it, the more I might just go and buy it. So I'll have more to say about it soon. I might do a little deep dive into this and see how a deep dive video does. But first we need to drink a beer before we move on to the next company. So another one that I wanted to show you, I mean, this pattern played out perfectly in this one as well, which, I mean, if you look at, I'd say probably 80-90% of SPACs, when they announce a deal, you're going to see a pop like this. But this one's Pivotal Investment Corp. It shot up from $10 to $14 at the high after a day or two after the announcement. And I mean, honestly, I probably would have sold it here when it was about $12.40, because that's our 20% profit. That's our sweet spot. But this one did pop up a little bit, and the reason why is they agreed to combine with XL Hybrids, which is an electric truck company. And investors seem to love these things, but in my mind, the electric vehicle market is getting a little overcrowded, a little packed, and I'm not sure who's going to win this. But what I want to do, when investing in like the EV trend, which is real, is find like the picks and shovels play. Find something that goes into every one of those cars. And you don't need to necessarily pick the winner, you just need to get the trend right. And that's the easier way to invest. So I'm going to stay away from most of these EV truck makers. And, I think some other analysts are having the same idea, because you can see it went from 14 and now it's back down to $10. They try to figure out what exactly is XL Hybrids. And I don't think they have a product yet either. I think they're in prototype. So anyways, it pulled back, and you got to be a little careful. And there's another one I want to bring to your attention as well, because you can't just go and buy any SPAC. I mean, you got to be careful, because there's one that's called KBL Merger Corp. Let me find them here. Yeah, so these guys, if this loads, but this is the chart for KBL Merger Corp, which merged with a company called CanBioRx, which also changed its name to 180 Life Sciences Corp. But you can see here, you need to be careful, because not all announcements are good announcements. And this one just really crapped the bed after the announcement, because it's a sketchy marijuana company. But the company really wanted to make it, or the SPAC really wanted to make a deal. So, I mean, the deal got announced here, and it just went, just tanked. And this is why you have to be careful, because if you get into a bad one, you're going to blow up. And you could tell by looking at the management here that, there might be a little bit of a sketchy deal going on here. So this is one reason, I would just stay away from the marijuana space in general. I don't really know what 180 Life Sciences does, but it's not something I want to get into. And it's why I have to be careful. And so, SPACs are becoming more popular, and, that makes there are more SPACs looking for private companies to take public. And there's a bigger growing pile here, but the private companies that are, ready to go public, that's a pretty stable grouping of companies. So you have a bigger growing pie with a smaller, pool of applicants to go for. So they're going to get a little desperate at times, and this will happen. So anytime something gets popular, you're going to get some shysters coming in there. And I don't know if these KBL merger guys are shysters or not, if they meant to do this, whatever. Maybe they just caught a bad deal, or maybe investors haven't caught on yet. But anyways, you got to be careful, because you don't want to lose 80% of your money. And you need to be super careful in this market. And if you want help doing this, that's what I'm here for. I'm investing and looking in these markets. It's my full-time job. I'm in here, a few hours every day looking at the SPAC market to see what's good and what's not, and tracking what's going on. Anyways, if you want to get more advice on SPACs, please subscribe to the channel. Make sure you get alerted every time I put out a video. And I'll try to help guide you along the path of this new and exciting investing trend that we're seeing in the markets. But until then, cheers, friends.